Welcome to our channel Stocks in the USA. Today we will analyze two incredible quarterly reports concerning two super big tech giants in the market. Do you want to know if after these data, these stocks are worth buying without hesitation? Or are they already overvalued? In the middle of these continuous stock market downturns, could these be two opportunities or traps to avoid? So, watch the video to the end because only at the end of the analysis you will find our opinion on the prices of these two market leaders. And you will understand whether to add them to your portfolio right away and make a great deal. Before we dive into the first stock, remember to subscribe to the channel, give it a thumbs up, and activate the bell to stay updated on new videos. But let's get started with the first stock right away. Meta Platforms Inc. Meta. Meta released its quarterly report on Wednesday after the market closed, and the market's reaction was very lukewarm. In fact, the stock remained virtually unchanged, closing the week at $296.73. This would suggest a decent quarterly report that more or less meets market expectations, nothing more. So let's dive into analyzing the key points of this report to understand how it really went. The first impressive point is the revenue, which reached $34 billion in the quarter, up 23% year over year. But what's even more impressive is that Meta achieved this result while reducing costs and expenses by 7% year over year, doubling its operating margin from 20% to 40% compared to last year. Net income rose to $11,583 billion, an increase of 164% year over year, and diluted earnings per share reached $4.39, an increase of 168% year over year. These numbers are incredibly impressive, and honestly, Meta has exceeded even the most optimistic expectations because no one expected to see revenue growth of this magnitude. Let's take a look at some other interesting numbers. The Family Daily Active People, DAP. People who use the platform daily increased by 7% year over year, and daily active users of Facebook increased by 5%. Ad impressions increased by 31% year over year, and prices decreased by 6% year over year. In simple terms, more people are seeing many more ads on the Meta Family app, which is also the main driver of revenue growth. Furthermore, we can see that cash equivalents, and marketable securities increased to $61.1 billion, and the company generated $13.6 billion in the third quarter alone. This is a significant amount of liquidity on the balance sheet and a substantial amount of free cash flow generation. We also note that Meta's number of employees decreased by 24% year over year, so significant staff reductions are likely contributing to many of these operational efficiencies. This chart shows us the revenue sources for Meta in various geographical regions worldwide. Once again, the data says that overall revenues increased by 23% year over year. But what's equally impressive is that every geographic region has reported strong revenue growth. Not only did the United States increase revenues by 17%, Europe also grew by 10%, Asia grew by 15%, and the rest of the world by a whopping 35% year over year. So once again, every geographic area in the world is experiencing strong revenue growth. This quarterly also shows the average revenue per Facebook user worldwide. So the global revenues have increased to $11.23 per user, an increase of about 20% year over year. In fact, every region outside the United States and Canada has seen an increase in average revenue per user. Europe is at a record high of 194 hours. The Asia-Pacific region is at 512, and the rest of the world is at 422. And in the long term, these regions are expected to continue to grow. Now let's move on to Meta's cash flow statement, which is our favorite financial statement. We can see that Meta generated $20.4 billion in cash from operating activities, also known as operating cash flow. Last year, in the third quarter, Meta generated $9.7 billion in operating cash flow, which means that their operating cash flow more than doubled year over year. This is the highest operating cash flow the company has ever produced in a single quarter. What's even more impressive is that Meta achieved this while simultaneously reducing its property, plant, and equipment expenses, or capital expenditures by $6.5 billion, essentially cutting them by a third. The company has performed much better than expected, and it's an incredible amount of profit. We didn't expect Meta to return to record profits so quickly, but it did so exceptionally well. Meta also used $3.6 billion of free cash flow to repurchase shares, and they increased their cash position on the balance sheet by $8 billion in this quarter through organic cash flows. Meta's operating cash flow is now at an all-time high, so operations are literally once again producing a record amount of liquidity for the company. However, free cash flow has not reached its all-time highs in the last 12 months, but it is increasing overall. No one expected Meta to have such strong revenue growth. The company is recording nearly 20% year-over-year revenue growth in the fourth quarter. Or at least that's what they claim to anticipate. If they can maintain the same 40% free cash flow margins achieved in the third quarter, this could result in about $15.5 billion in free cash flow in the next quarter alone. However, Meta expects to increase its capital expenditures again next year, so free cash flow could be weighed down in 2024, and free cash flow margins could potentially decrease again next year. But overall, this has honestly been an incredible report. Meta is doing exactly what it said it would do, which is increasing its margins and restoring profitability. And it's doing so in a big way. The company is not expensive today, and we think the profits are truly impressive, so we don't understand what the market really expected because this report exceeded all positive expectations. Meta also has a future closely tied to the development of artificial intelligence, in which it is one of the major players. And for this reason, its potential may be difficult to quantify. In our opinion, a potential target price for the stock could surpass its all-time highs, even exceeding $400 per share, and then aiming for other objectives. What do you think about Meta and its AI-related potential? Is it a stock you have in your portfolio, or until now, did you not consider it a good investment? Let us know your thoughts in the comments, and if you have any topics of interest for future videos, feel free to suggest them. But now let's move on to the second stock in this video. Amazon.com Inc., AMZN. Unlike Meta, after the quarterly report was published, Amazon saw its stock prices rise by over 7% to close the week at $127.74. On the day, Amazon's reaction was impressive, especially considering the overall market was in decline. Let's analyze the key points of the quarterly report to find out what pleased the market so much. Let's start with net sales, which increased by 13% from $143.1 billion to $70.7 billion in the last 12 months. This is a record amount of operating cash flow for Amazon's business, so the company is back to producing record amounts of operating cash flow, which is simply incredibly impressive. While it was expected that Amazon would produce more operating cash flow, it wasn't expected to reach these record levels for the quarter. So we can say that both Meta and Amazon have pleasantly surprised us and are outperforming even the most optimistic expectations regarding profit generation. Amazon has generated free cash flow of $21.4 billion in the last 12 months, returning to generating billions of dollars in free cash flow. The company also reports growth in all its various business segments. Let's see how Amazon's various activities are growing right now. Online store sales increased by 7%. Physical stores increased by 6%. Third-party sellers increased by 20%. Subscriptions increased by 14%. And advertising increased by 26%. Finally, Amazon Web Services, AWS, increased by 12%. Practically every segment of Amazon's business is growing quite strongly. What's truly impressive is that Amazon has 4 activities that now generate over $1 billion in revenue each quarter and are growing by over 10% year over year. Third-party seller services are also performing well, with $34 billion in revenue per quarter and a 20% year-over-year growth, making it a much larger business than AWS and growing much faster. Advertising services are also accelerating, with a 25% year-over-year growth. Before we continue with the analysis of Amazon, if you're enjoying the video, please subscribe to the channel, give it a like, and activate the bell to stay updated on new videos we'll be releasing. Thank you. Amazon is much more than just AWS, but AWS seems to be what all analysts are focused on, and it seems to be the only thing that interests investors. If AWS's numbers are a bit down or don't meet expectations, people seem to be quite bearish on Amazon, even though overall AWS is a small part of Amazon's overall business. Now let's move on to Amazon's cash flow statement, and we note that it reached $21 billion in operating cash flow this quarter and $71 billion in the last 12 months. Once again, this is an all-time high for Amazon's operating cash flow in the last 12 months. What's highly intriguing is Amazon's historical performance in the third quarter in terms of operating cash flow. Looking back, we can see that the highest operating cash flow recorded in a third quarter dates back to 2020, with an impressive total of $12 billion generated. This represents a significant increase from its historical quarterly performance and a significant development for this specific period of the year. In other words, Amazon is now valued at about 17 times its operating cash flow, which has historically been the benchmark for its stock market value. In January 2023, this ratio dropped to 17, indicating a lower value and, in fact, the lowest level in the past 10 years. So although it's not the absolute lowest value ever recorded, the price in terms of operating cash flow is currently at its lowest level in the past 10 years, making Amazon incredibly cheap compared to its historical average. The forecast for the fourth quarter indicates sales of approximately $163.5 billion, representing a 10% annual growth. This suggests that Amazon still intends to maintain double-digit growth, or at least something very close to it in the next quarter. In general, we can say that this quarter has been a success for Amazon, as its business is operating in line with the company's stated expectations. While an improvement in operating cash flow was expected, Amazon's outstanding performance in cash flow generation in this quarter exceeded expectations. The company is restoring its margins and producing a record amount of cash flow, far surpassing results from previous quarters. It's important to note that the fourth quarter is usually the period in which Amazon records its highest profits and higher margins. So there is great curiosity about how the company's cash flow will develop in the coming months. Amazon's shares are also trading at a low price relative to its historical averages, so we believe it's undervalued. And based on our analysis, Amazon has a potential target price of over $200. So we can safely say that both quarterly reports were nothing short of excellent, and confirm the growth potential of these two companies in the medium and long term. As always, we remind you that we are not financial advisors, and these are not invitations to buy but only our analyses, the result of our experience in the stock market. We always recommend conducting further analyses and ultimately making your decisions, because the money is yours, and you need to be aware of where you want to invest it. Thank you for your attention, and we hope this video has been helpful for your investments. See you, investors.